Well, good afternoon. You're listening to the new WCEG Network on WCEGTalkRadio.com. Click your live stream tab or watch us live on your smart TV, YouTube, WCEG Network. I'm Celeste Giordano, your show host of Global Legacy and Wealth Building for the next hour. We're the worldwide community empowerment group where we speak life into the community. Like us on Facebook, follow us on Twitter and on Instagram at WCEG_talk_radio and at WCEG Network. We also have new platforms with the Apple TV, WCEG Network TV. And last but not least, our disclaimer. The topics and opinions are those of the show host and guest and not WCEG Network. Thank you for your continued support. And hello, Sara. Happy early Valentine's Day.
Hey, Celeste. Thank you. Same to you.
Absolutely. And it's such a pleasure to have you as a guest here on WCEG Network. And just want to thank Penny Rogers and the board for this opportunity and this platform, because it's an amazing opportunity to speak life into the community, especially to our communities about education, about finance, about banking, about business consulting, plus our nonprofit show. And we're just very grateful for the opportunity and the platform that WCEG presents to our community in Atlanta. So thank you, Penny Rogers and the board. And Sara, I am so glad to get to host you today because we are in a new year. Happy New Year.
Happy
And
New Year.
you're a CPA and a tax accountant, and we've got so many things to talk about as we roll into this new year. But first and foremost, what about the Super Bowl game and the Kansas City Chiefs? I know you're a big fan.
Oh, yes. Along the way, I've become a Swiftie. Never thought I'd say that out loud. But I love football. And I have family that lives in Kansas City, so I watch them all the time. I'm just so happy for those guys. I hate it for the 49ers because they were so close. But, us Falcons understand that. We've been there.
Absolutely. And it was a good game. And, I primarily like to watch the playoffs and watch the Super Bowl. And I, like you, that I'm going to say this, did Taylor Swift encourage me to watch those Kansas City Chiefs? Absolutely, she did. I mean, I enjoyed it, but the thing of it is, I really enjoyed the football game and how close it was. It was a good game. The team played in unity and unison. I also love the San Francisco 49ers quarterback. He's one of the youngest quarterbacks, first year as a quarterback, and he did a phenomenal job as well. So both of those teams, accolades to both teams, but congratulations to the Kansas City Chiefs. They did a great job.
Yes, they did. I was in Kansas City the weekend. It was so freaking cold.
I remember that.
Oh, I came home and said, I need to move as far south as I can because I can't ever be that cold again.
Absolutely. And that was some cold weather when they played that playoff game up there.
Yes, absolutely.
Well, I am looking forward for our audience to listen to our show here today because we've got a really great show about our taxes and different rules and regulations that are in place, some new things that are out. But before I do that, I would love to read a little bit of your bio for our audience and our listeners. And I also want our audience and listeners, if you have any questions, our chat is being monitored. Put your questions in the chat. We'll be glad to answer those questions for you. And with that being said, Sara Poe is a certified public accountant. She founded Poe's Accounting Service to help clients understand and navigate their finances. With a natural aptitude for managing numbers, Sara simplifies her clients' finances and taxes, taking necessary anxiety and confusion out of the accounting process. Working with individuals, families, and business owners in the Lawrenceville, Decula, and Brazelton, Georgia area, Sara helps her clients take a step back and view the bigger picture of their financial standing. With a broad understanding of the issue, she then narrows in on the fine details to address issues and implement efficient systems. Sara has over 30 years of industry experience. Sara has earned a reputation as a trusted accountant service provider, known for her warmth, honesty, and attention to detail. She builds lasting relationships with each client and serves them accordingly to her unique needs. Also, prior to launching her own business, Sara worked for such company as, is it Viasat?
Viasat.
Viasat, All Weather Heating and Air, Refrigeration Pacific Company, Post Construction and Development, a graduate from Georgia State University with a degree in accounting. She launched Pose Accounting in 2009. And when Sara isn't balancing budgets and filing taxes, she's enjoys spending time with her children and 3 grandchildren who she enjoys spoiling immensely. And those grandchildren are getting big, Sara. You got to be feeling old.
No, don't say that. Don't say that. Luckily, we got a new baby in the family, which makes me have to get on the floor to play. And that's a good thing to have to do because you got to figure out how you're going to get back up.
Absolutely. And also, I'd like to say for our listeners and audience that Sara is also the co-founder of Women of Community Impact. And Sara, you're all the time giving and serving in the community, volunteering, and thank you for your servant leadership. We appreciate that.
Well, thank you. And the same to you, Celeste. People don't really realize how much you do in the background. And I'm very thankful that you do those things in the background because here it's harder for me to be able to do some of that, but you go out there and you collect the goods and we give them to people and you're just amazing when it comes to that. And I don't tell you that enough, that I do appreciate you doing all that.
Well, thank you, Sara. I appreciate you. And we have an amazing board and we have a big year planned for 2024 and excited to share that later on this month on our show. I believe it's February 27th, whatever the fourth Tuesday is of this month is our nonprofit show. So we thank you for that. But I know we have a lot of things to cover because a lot of things have changed over the years with taxes and filing. We are into February. And so the first thing that I want to say is those businesses that had 1099s, they needed to be out by January 31st, right? And if they didn't, they need to get them done. Any comment on that?
Oh yeah, I got lots of comments on that. Because this year you had to e-file everything, which we had always been doing. The biggest thing I would tell you is I've got people coming in now who didn't do them in time, right? So we're getting those done immediately. We're not waiting on that. You can be fined for not getting them out in time, but I haven't really seen the IRS in the past few years passing the penalties on that. But with the way things are changing, you don't know. If you need help with that, call my office. We can get you that taken care of. You don't want that to be lingering and then that to be a reason why they call the IRS or the Department of Revenue because they didn't get their information, right?
Right. And also make clarity here. You do not need to send a 1099 if it was under $600. Is that correct?
That is correct.
Okay.
They have waffled back and forth on that for a couple years, but we're back to that right now. Yes.
And I mean, you can send them a 1099 if it's under 600, but you're not required.
Absolutely.
Okay, just want to make that clarity for our listeners. And also, Sara, why don't you go ahead and tell our listeners your name of your company and how they can get a hold of you before we get started in case somebody has to jump off early.
Okay, I'm Sara Poe with Poe's Accounting Services. Our phone number is 770-545-8841. And my email is SPOE@POECPAS.com.
All right, that's SPOE@POECPAS.com. Sara Poe, Poe's Accounting Services. All right. So my next question is, what is new for this year?
Well, I don't know how many of you have heard of this, but it's called beneficial ownership information. So basically, there's a different branch of the government called FinCEN. And basically, that's where we have to report anybody who's got a overseas account. And we have to report that to them, how much, where is it located, what bank, all that. Well, they have determined over the past years, we have a lot of money laundering, money fraud, all that. So now every owner of a company has to go into FinCEN and report who owns the company, how much they own, and all the particulars about the owners of the company, right? That's brand new this year. Typically, you've got 30 days to file that information, but because it's brand new this year, you get a year. Okay. I went and did mine like January 2nd. It's super easy, but people like I can help you with that for a charge. And if you need help with that, or you're just unsure about what to do, you need to call somebody who can help you do that. Um, it's it's a little bit time consuming because the way I do it is, so like for me, when I went and did mine, I went and set up an ID for me personally. So I never have to re-enter my information, my social security, my driver's license, all that. I set it up one time, put it all in there, and then I get an ID. So like a social security number, but not quite the same. So now anytime my name has to go into one of these beneficial ownerships, I could just put in my ID. I don't have to jump through all those other hoops, because you don't want to have to do that year after year after year, because every year you got to go in and do this going forward.
So you're saying every company has to register with this?
Yes.
So whether you are a sole proprietor or LLC,
S Corp, C Corp,
C
that
Corp,
matter.
everybody has to go in there and do that.
Yes.
Okay. And where do they go to do that?
So we go to FinCEN, okay? They have a brochure. Oh, here it is. I knew I had it out. But in this FinCEN, I was seeing if it was on here. It's www.fincen.gov/BOI. And you go there, they've got a lot of good information there that helps you walk through that. But it's just like this little brochure right here. You really can't see it.
Right.
Got little graphs and all that kind of stuff on it. But you just need to go in there and do it. And then every year just go back into January. I would say I would do it closer to the first part of January, because at the end of January next year, it'll be crazy, because next year you only have 30 days.
And so they put this in that every business, entrepreneur, sole proprietor, self-employed, do self-employed people have to do it?
Well, self-employed would be if you've got an LLC or that. Now, yes, you would have to do it.
Okay. And the reason for that is they're looking to track people that have overseas accounts?
Overseas accounts and money laundering, right?
Okay.
Who do they go after if you're caught doing money laundering?
Right.
And
Okay.
most of it has to do with overseas, but that's what originally FinCEN was set up for, was for overseas banking information.
Very good.
It can be a little bit overwhelming. That's why so all my clients come in, when we do their taxes, we're going to do this at the same time.
Same time.
At the
Okay.
same time, especially my small business owners. I'll show them exactly what to do, get their ID set up, then do the process, print out the ID so they've got that to take home with them. And then next year, after they do it this one time, they may be more comfortable doing it.
So every year, what do you have to do? Is just go in there and update it, Sarah?
Just update it, yeah.
What, if nothing's changed, or is there questions that would change?
There'll probably be an added question every year, just so that they know that people are looking at it.
Okay. All right. Very good. So,
but it's just another way for them to track what you're doing.
all right. Well,
If people don't like to give, I'm sorry, people don't like to give their bank accounts, they go, I said, you don't think they already have access to that?
Yeah, they know.
Yeah, they do know.
Big Brother's watching.
That's right.
Absolutely. Well, Sarah, if you could type in the website into the Zoom chat, that would be great. And we'll get that out to our audience and our listeners, because that is definitely new for this year. And I'm sure there's some other things that's new this year besides the beneficial ownership information, right?
Well, they're still passing legislation for child tax credits and the such. It passed one house. The last I heard, I don't know, haven't heard if it passed the Senate. And as soon as that does, we'll put a pin in it because we'll have to update our software. We'll have to update all kinds of stuff. But they were trying to get that done before the end of the year, but we know that doesn't always work. The state of Georgia was a little bit behind the eight ball this year. They just opened up e-filing for businesses, where that's been opened up for the federal side since January 29th. So there is some little bit of lag, but it's because that software takes so long to update. And
Right.
they have to test it. But you just got to be prepared for that.
And we also probably need to remind our seniors to file for homestead exemption by what, April 1st?
April 1st. And I've got to file for mine in Hall County, so I got to go figure out where to go. If hopefully I can do it online.
I think you can. I mean, Gwinnett County, you can file for it online. So
You
I would
can.
think, yeah, I think Hall County you can too. The other thing is, isn't there something new with the COVID, the laws with COVID, Sarah?
So this is not new. This has been in place since COVID, but let's just say I work for myself, right? I
Right?
got COVID twice during 20 and 21. So there was a tax credit that if you didn't get, let's just say you work for a company, but they still paid you the whole time, you didn't get this credit. But if you're an individual who works for yourself, you didn't make any money during that time because you were sick, right? So
Right.
there was a tax credit that you could take for that. So, but you want to make sure you do that this year on your 20 return because it's due no later than April 15th. And again, my information is up there. I put it in the chat. If you need help with any of this, don't hesitate to call me. Just get Jennifer to put you on my calendar. If it's on my calendar, it happens. If it's not on my calendar, it don't happen.
Absolutely. Absolutely.
But I'd love to help people because I don't want them to miss out that. And if you haven't filed your 20 return, you may not have gotten all your stimulus money. So you need to make sure you get that done.
Okay.
Because
Very good.
typically what that does is they give you 3 years to file, right? If you don't file within that 3 years, you lose your return. You lose your refund. There could be a penalty if you owe some money, but in the big scheme of things, it'd be better off just to get it filed.
Absolutely. Absolutely. So what is passed through entity tax?
Okay, so last year they started this, and I think this is one of the reasons why Georgia was a little bit behind this year. So there's pass-through entities, S Corp, LLCs, different things like that, partnerships, where all your income goes to your personal return, okay? Well, in the state of Georgia and probably about 12 or 13 other states, they came up with this little tax deduction for us last year. If you pay all your estimated taxes to the state by December 31, you can now lower your taxable income with that. Now, if you don't pay it by the end of the year, all of it, then you can only take what you paid.
Paid.
So before, you didn't get that nice little benefit of deducting that, right? You had to just, well, I got to pay it. It's just something I got to pay. But now if you pay that by December 31st, you can deduct it on your state tax return. And every little bit helps.
No, absolutely.
Because, we all have to pay as we go. And it's easier to pay a little bit at a time as opposed to on April 15th, somebody walking up to you and say you owe $25,000.
Right, absolutely. And, and that's another reason why just some business coaching here, all my clients know this, when you have a business, there's what I call, you need like five wise women, five wise men, whatever you want to call it. I call it five wise women. And number one, when you open up a business, you want to have a business coach, somebody that has been very successful running a business, knows the ins and outs, is highly connected, and that they're going to save you money. They're not going to cost you money when you have a business. And the very next person that you want to hire is a CPA or accountant or bookkeeper, preferably depending on where you're at in your business, a CPA, because you want to get a profit and loss statement, whether it's quarterly, it's monthly, whatever it is, and you want to build that relationship with the CPA. Because they're not going to cost you money, they're going to save you money. You also want to have a relationship with an insurance person because you have to have business insurance. And some of you have a business and you have personal automobile insurance and you're using your car as business. And you know what? If something happened while you're driving that car with your business, your insurance may not pay it because you are using it for business and you don't have it registered for business. So make sure you have a relationship with an insurance person that can help you and guide you. The other thing you want to have is a financial advisor and then your banker. You want to have a relationship with a banker. I know we live in a digital age right now and everybody gets things online, but you know what? You need to walk in that bank and introduce yourself to that branch manager or that vice president and let them know who you are. You never know when things are skyrocketing and you want to go get a loan and you want to expand that business and they don't know you from Adam. But if you go in there and they know you, you got a better chance, along with your credit rating and everything, of having a great relationship and a good foot in the door. So definitely, want to do that.
And just to feed off of that, don't commingle business and personal funds. Because if
Absolutely.
you do that, one, if the IRS audits you and they see that you do that, now if they start with your business, now they can move to your personal because you commingled. You have veiled that curtain there, that veil of secrecy. If you get sued and you've done that, now they can go after you personally because you commingled. Do not commingle. No, 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 no,
Absolutely.
no. It's a big
Absolutely.
no-no.
It is a big no-no. Absolutely. So I had a question from somebody, one of our audiences. What is the new deduction?
The new deduction.
I don't know what that means.
Well, I think it could be, so with property, there has been some changes with if you're 65 and older, that they have been cutting out some of the property taxes you pay. I do know that just went into effect. Last year or this year, I can't remember because I'm not quite 65, so haven't come to that yet.
Well, and the other thing about that, sir, because we have looked into that, you can only make a certain amount of money. And if you make over X amount of dollars, you're
Then you
not
can't get that.
you
Okay.
are not eligible for it. I want to say it's somewhere around the 78 or 100, it's right around between 75 and 100,000. If you make that much money, you cannot qualify for that.
But most of your seniors are not making as much money, so hopefully more of them are getting those advantages. I will say the state of Georgia is one of the better states for seniors. The state of Georgia is lowering their tax rate. We've gone down a quarter this year, and they've got a plan to go down, and eventually they'd like to get to zero so that they can compete against Florida, Texas, Tennessee, Arizona, those states that have zero tax.
State
Yes,
tax? Yes,
state tax.
absolutely.
So that's what they're trying to do by doing this. North Carolina is doing it. There's several other states that are lowering their tax rate. That doesn't mean your sales tax won't go up, but
Oh, it will.
and it's something I didn't even think about till we just started talking. There is a new sales tax out there from media. All right, so let's just say I come in there and I take all these pictures for realtors, right, of homes. It could be, what if it's pictures, it could be video, it could be drone, it could be whatever. And I sell those pictures, I now have to pay sales tax on that. You've never had to pay sales tax on that until this year. Okay. If they can, the way to look at that is if the person you're giving those pictures to have lifetime access to those pictures, there's a sales tax involved. Okay.
So would that have the same thing to do, Sarah, with a professional photographer that does
Yep. Yep.
headshots? Okay.
So, and then there's books, news, magazines, Audible, anything like that is now taxable in the state of Georgia. One way it's not taxable is because I have a client who comes in and they do 3D imaging. So you can take a virtual tour, say like a daycare, right? You can do a virtual tour of the daycare, see if it's right fit for you, whatever. That is usually on a subscription base. They don't have lifetime access to that. That is not taxable.
Right.
So
Because you
in
could
this,
cancel that subscription at any time.
right, absolutely. And when you do, you lose access to that 3D virtual tour,
Sure.
right?
Right. Exactly.
And a
So
lot of states have started this. So when you are selling in different states, my client sells in 6 different states. So now they have sales tax they've never had before. So
wow.
we are getting them up and running for that.
Absolutely. And I want to step back into that homestead thing because you said, I said that it's between like 75 and 100,000, give or take. The other thing is though, Sarah, is we have more and more people not taking Social Security till a later age so they can make an unlimited amount of money because we're living longer and people are working longer.
Oh, absolutely. I'm planning on not taking my Social Security till I'm 70,
Ex
71.
exactly. And you can do that up to, I think, what, 72 now?
Yeah,
Yes,
72. Yeah.
72 on that. All
Because
right.
I'm planning on working until then. And I don't want my Social Security to be taxed. So why would you take it? Because if you make too much money, it's all taxed.
Absolutely. Absolutely. Okay, how about planning for retirement? What do you have for our audience for planning for retirement?
Well, there's so many different things out there. And so I printed me a little list so I wouldn't forget any. But as a small business owner, we take care of our employees, we take care of that sort of thing, but we don't always put retirement in there. And I was guilty of that for years, and I don't want people to be guilty of that, right? So there's individual 401ks, there's solo 401ks. For these are options for small business owners. There's a SEP, there's simple IRAs, there's SEP IRAs, there's defined benefit plans. But the thing is, you can do the same amount as somebody who has a 401k at a business, and you can take that money out of your account just like they do at the same amount. But with a small business owner, if you do a SEP, you could possibly put up to $52,000 in a retirement fund. That's a nice little chunk of change.
Right,
And
exactly.
and we don't want to get to 70. I don't want to get to 70, 71 and I start taking my retirement and can't live because I'm used to a certain lifestyle. I have to plan for that, right? So
Absolutely.
that's where, like Celeste said, that's where that financial planner comes into effect. Have those conversations with them. It could take 2 hours. That's okay. Have those 2 hour conversations. Ask those questions. Make sure you're doing all you can to protect your future.
Well, and if you're looking for a financial planner, do your due diligence. Just don't talk to one person, you know, talk to people that, birds of a feather flock together. Talk to people that you admire, that maybe some mentor, or somebody that is living a good, successful life. Ask for a referral. Because we have so many young people, old people, whatever it is, people coming in past their exams, and they're not experienced. And so you really have to do your due diligence. You can't, just because they work for a company doesn't mean that I don't want to say they're not qualified, but
Right.
you need to do your due diligence and inspect what you expect. That's my favorite saying.
It is so true. It is
Inspect
so
what you
true.
expect right there.
But yeah, you just need to be prepared. I mean, I've got HSAs, right? If you have an HSA, you need to be socking as much money as you can into that sucker. Because you know what? An HSA you don't have to use every year. An FSA, yes, not an HSA. But what that does is you can put money into that tax free. And then when you're in your 70s or 80s and you've retired, now you've got a little bank over there. And if you use that money for medical, it's still not taxable when you take it out. If you use it for anything else, it is taxable, but it's a nice little way to bank some change for later in your life, because medical bills tend to go up.
Oh, most definitely. And I mean, with insurance and deductibles, and you haven't met your deductible and you have to go get a CT scan or something, you got to pay out of pocket,
Yeah,
right? So
that's right.
you can use that from that account. Is that correct?
That's absolutely correct.
To
Yeah.
to pay for it.
Yeah, and there's a lot of HSAs that you can invest. You can invest that money if you know you're saving it for that reason, or but if you know you're having a baby, you probably may not want to do that, but it's a good way to make a little more money on the side.
So
And
so go ahead.
it's just get your young teenagers to put money in a Roth. Granted, they can't put but 6,000 or 6,500 in there. It changes every year, but it's a good way for them to do just a little bit every year. Think about it. If I had done that, I wouldn't be worried about retirement now.
Absolutely. Absolutely. So I know you were talking about the health thing. How can health insurance help a small business?
So, you know, I'm a I'm a so I'm a single member LLC. Okay. So I have to provide my own health insurance, right?
Right.
Because I'm a solo person, I can deduct that full amount as health insurance. Whereas if you have to put that on a Schedule A, you got to meet a 7.5% floor, then you got to be over this. But as a small business owner, I'm taking the full deduction in my health care, right? I get to do that as a small business owner. Now, as a W-2 employee, you don't get that opportunity. And if you came to me, I'd say, okay, we need to talk about a side business. What are you good at, right? Because
Right.
there's other ways to get tax deductions that way, but it's got to be a true business. But we need to think. One of the things that and I think I put this on the list, is the big picture. You know, I start out every tax return putting it where it starts, right? A Schedule A, a Schedule C, a Schedule E. Then home office. Is it a Schedule E? Is it a Schedule C? And where's it going to do better? A Schedule A, standard deductions change so much. And I know I'm jumping all over the place. A Schedule A, the standard deductions have changed. You get that Schedule A. So we use all that home mortgage on your Schedule C or Schedule E, where people don't necessarily think of that, right?
Right.
So when you come to a tax professional, they should be looking at the big picture. HSA, retirement, self-employment, all those things, so that you get the best that you can get.
Well, absolutely. And if you're running an LLC or a business on solopreneur, there's so many things that you can do with that money that is tax deductible, with it. And this is another reason why you want to have a CPA or bookkeeper. Because at the end of the year, you may have made so much money that you need to buy something this year to bring that bottom line down.
Absolutely.
And it may be that if you have excess money that you want to pay for a service, whether it's a CPA service for next year, that I'm sure you probably offer a deduction if people say, Sarah, I want to write you a check for all of next year. And I guarantee you're going to give me a better deal than you sending me a bill every month.
Absolutely.
You know.
Because guess who taught me that, Miss Celeste? And I've
Absolutely.
been doing it ever since. And I will tell you, men love it more than anybody. Men will go, I get a discount. Here's a check.
Absolutely. So my sister's a good example. She runs a printing business. And so every year she buys piece of equipment to grow her business in December. And that brings the bottom line down, for her. And she does quite well with that. But yeah, definitely get a relationship there, because the other thing is you don't want to wait till December
No.
15th. And then you go and say, what do I need to do? And nobody's kept your books for the whole year. Nobody knows where you're at. And then come January, it's too late. Now, there are some things that you can do, Sarah, in the following year that you still get a credit. What are some of those things?
So some of those are 401k. Like I always put my money into my Roth IRA in February and March, right? Because
Right.
I know I've got till April 15th to do that, or
Right.
until I file my tax return. But I always do it during tax season because that's when there's more cash in the bank,
Right.
right?
Right.
So that's when I always fund mine. I pay all my estimated taxes in May for the year because, again, there's more money in the bank.
Absolutely.
But
Absolutely.
it's just those type of things you know, June and July are slow because people don't want to think about taxes. They're on vacation. They're at the beach. They're in the mountains. They're going to Italy or wherever they're going, right? That's the last thing they want to think about. And then they come back, it's time to go to school, and they go, oh crap, I hadn't done my taxes. So then you got to do that. But if you want undisturbed time, June and July are the months to do that because we just don't see as many people that time of year. And I'm trying to get all my clients to come back in. Let's talk. Let's do this.
You need to have a conversation with your CPA accountant. Again, I'm going to say this: quarterly, monthly, you need to have that relationship. You need to go have a break bread and have fellowship, have a meal with them and talk about things, because there may be a dream or a goal that you want to buy that summer cottage or someplace on the beach, and how you're going to plan for it, because what you're thinking and what a CPA is thinking, a lot of times, a snap of a finger, they can tell you exactly how you're going to do it.
Yeah. Or if
Right
you want
there.
to sell that summer home, talk to us before you do it so you know what the consequences of that is.
Oh, that's right. And how long you have, if you have to reinvest the capital gains, blah, blah, blah. The list goes on and on and on. But the other thing is, Sarah, since we were talking about those taxes, for our audience, even if I hate to talk extension because I don't do that, but if you have to do an extension, if you owe money, that doesn't mean that you can file your taxes in October or whatever it is. You still have to pay that money by the
Yes, you need
15th.
to pay 90% of what you owe by April 15th.
Right.
In as many times as I've heard tax professionals tell people that, it shocks me every year that somebody has not heard that or does not know that. And then they get that penalty when we file and they go, I send out newsletters every week and all this information's on there, right? I've had people get angry at me. You didn't tell me that. Okay. I'm not going to argue with you, but if you owe, pay 90% before April 15th.
But you know what, Sarah? I'm sure that you have a checklist with people, and well, there's two things here. That somebody's utilizing your services for the year, I would have a form that I'm sure that they sign or they've entered in a contract with you, and I would have that statement in there that in the event that you have to file an extension, I want you to know that you still have to pay that money by April 15th. So when they sign, here it
They see
is.
that.
You see,
Absolutely.
you see that. Um, so I think, and that's so important. And if you are a business entrepreneur out there, and especially if you're a CPA or bookkeeper, you should have contracts with your people to protect you, to protect them. And it's
And we
just
call
good
them engagement letters.
engagement. Yes,
That's what we call them. But yes,
absolutely.
I had to do one over the weekend, and you start out with a blank slate because everyone's different. They may want something different than somebody else and vice versa. But in there, it states what happens if you come to an impasse and you don't agree? How do you handle that? You know, I had a guy that come to me this week a brand new client, and his old CPA wanted him to sign something. They were going to do his monthly bookkeeping. If they ever came to an impasse, he had to pay him the rest of that contract, whether if he left or not. I'm sorry, I'm not going to do that. That's
No,
wrong.
yeah, I agree. I agree.
It's the same thing with a tax return. If you pay me to do your taxes, I'm giving you every page of that tax return. I'm not leaving out that depreciation schedule so that you got to always come back to me. I don't feel that that's right.
Absolutely. And speaking of depreciation, Sarah, should I take the maximum amount of depreciation?
And this goes to that full picture thing, right? So let's just say I'm having a decent year and I went out and bought something I can depreciate. Okay. There's usually accelerated depreciation and bonus depreciation. So what I do with clients is that I look at all three options, right? We talk about where they think they're going to be in the next couple of years. Is the income going to go up? Is the income going to go down? Because you may not want to take all that depreciation this year. You want to be able to hold it over for some next year because a big contract's getting ready to come in and you're going to make more money next year. So you got to look at the whole picture. It's like looking at a chessboard, right? I don't
Right.
play chess, but it's what I think of. You have to look at that chessboard to see what are the best moves to make. The same with depreciation. I had a guy who owned gas stations and he would have to repave those gas stations every so often. And he had a rule of thumb. If it was this much or this much, then we took the full, depending where his income was. But again, it is the big picture. Looking at that and making determination exactly what is the best thing to do for you, Celeste. Maybe not for me, but for you. You have to look at
Absolutely.
the individual to determine that.
Absolutely. And that's why you need to build a relationship and have conversations
Right.
right
Because
there.
when my clients come in here the first of the year, I go, so what's new? What's going on? And I'm not just asking just business wise, because if I do your personal tax returns, I like to know that if there's something happening. As an example, I did this, it's my opening conversation. What's going on? And her husband goes, well, God, I wish we could take all those wigs off she buys. I said, well, why do you buy wigs? She loses all the hair in her body. So she had no hair in her head. So the doctor prescribed her to get wigs. Guess what? That's a medical deduction. Those wigs. And nice wigs are expensive.
Yes,
So if
they
I
are.
don't know that, I can't help you with that. So when we ask you what's going on, we're trying to determine what all's happening in your life.
Absolutely.
Supposed to help.
So there's another good piece of advice, Sarah, and you've got a good app for this. And talking about the mileage rate. What's the mileage rate?
Oh gosh, I don't remember. It changes every year and I don't look. Last year it was 56. I haven't looked this year. But those third party mileage apps saves you a lot of heartache.
No, and the thing of it and you're at the end on December 31st, you need to go get your check your mileage. But
Yeah.
I learned this from you, Sarah. Every year, between Christmas and New Year's, I go get all of our cars and get the oil change. Because guess what, man, that odometer is red. I don't have to,
That's right.
it's
It's
red.
it's on a third party piece
A
of
piece of
paper where you
paper.
can show that to the IRS. It's right here. This is where I got it from.
Yes.
Okay.
Yeah, absolutely. So I just want to say that because a lot of people just think, well, I don't know. And then they try to guesstimate and do this and do, no, man, this is a real simple deal, you know,
I
and don't
love
get,
when I ask clients, so what was your mileage this year? And they sit back and they look up at the ceiling and I go, oh, okay, we're guessing.
Well, so let me ask you this, and I know you touched on this a little bit. Why is HSA important? Did you cover all that, Sarah?
Yeah, that's the biggest thing. It has to do with taking out money out of your paycheck that's non-taxable, keeping it for non-taxable, but more when you'll need it the most, and as you get older.
Right. So let me ask you another question. What about with these Venmo, Cash Apps, PayPals? What are they sending
That
10
has
nine?
not gone into effect yet.
Uh,
Eventually, what is going to go into effect is I pay people with Venmo. I pay my massage therapist with that. I pay my hairdresser with that. So what that's going to eventually do is they're going to have a way to track some of your income. Now, if I pay my nephew his birthday money, that's not true income, right? The IRS may say it is because you got a $25 check, but it's just another way for them to track how much money you're making. So you need to be careful about that. When you pay people those things, put an explanation on there. Massage, hair, cleaning my house, uh, those type of things. So then it's easier for those third-party apps to categorize that stuff correctly. But this was supposed to go into effect 2 years ago.
oh, right.
And luckily it hasn't, because it's going to be a nightmare when it does, because it's going to be your responsibility to get it fixed with the vendor, not the vendor's responsibility.
Responsibility. I got you. So here's another good question, Sarah. So as I said, January, we talked about everybody had to have their 1099s done, by January 31st. So we have some other um deadlines coming up. So what about what's due in March? Well, estimates, give me some dates and
Okay.
some times for people.
So March 15th is when S Corps and partnership returns are due. Okay. Those don't have taxes that are owed on them. They give you K1s, which flow to your personal returns. So then the next deadline is April 15th, when C Corps personal are due. Okay.
Okay.
Nonprofits are due May 15th if you're a calendar year taxpayer. Okay. You can get extensions for all of those. So those extensions go for September 15th for S Corps and partnerships, October 15th for C Corps and personal, and November 15th for nonprofits. Now, if your nonprofit stops at the different times of the year, then you just have to look up the deadline for that. Okay. Our first estimated payment is due April 15th.
15th.
April 15th. And then they're due June, then they're due September,
September,
and then December.
December.
It's really
Absolutely.
due April 15th, but I tell my clients December, so that gives me 15 days to make sure they get it done. But you want to make sure those things are done. Again, because of the new tax law with Georgia, you're missing out on a tax deduction that you could take if you don't pay it by the end of December. That one has to be paid by the end of December.
So we have somebody that put a question in there to give the dates again, starting with March, please.
Okay, March 15th, S Corps and partnerships. Okay, April 15th, your first estimated payment is due, your personal return is due, and a C Corp return is due. Okay. May 15th, your nonprofits are done if you're on a calendar year. Okay. Then June 15th, your second estimated payment's due. September 15th, your third estimated payment's due. January 15th, your fourth and final payment, estimated payment is due. Okay. Then we want to go back to September 15th. That is when your extension ends for partnerships and S corps. Okay. Then October 15th is when C corps and personal extensions are due. And November 15th, your nonprofit extension is due.
Absolutely. So there's another question there, Sarah. So for those people that are incorporated, they have to register with the state. Is it every year? They can do it every 2 years?
Year.
Every year.
The state of Georgia has now included something where you can pay for 2 years and you pay for 3 years. I pay for 3 years every time. For me, I don't have to think about it again. The only thing
Exactly.
I would have to go back in there and do during those 3 years if something changed,
Right.
update it, right?
Right.
But that's it. I love it because I don't have to think about it again. All my clients that I take care of their registration, I do it for 3 years.
Absolutely. And
My
also,
nonprofits, I do it for 3 years. It's
absolutely.
one less thing you have to worry about by April 1st.
Absolutely. You know, and it's almost like with your domains, you know, people, well, I'll just do 1 year, 1 year. No, man, give it to me for 3, 5 years, just here. I don't want to have to think about it like you say.
Yeah, it's just like when you could get your driver's license renewed online and they went to 10 years. I'm like, yes,
Oh, yeah,
baby,
yes,
let's
I
do
did too.
that.
We did too. So let's see, there was one other questions about some dates. So what about people with county that their business, they have to register with the county?
That's April 1st. A lot of things happen by April 1st, right?
Right.
Like I'm in the city of Decula, so I have to get my business license by April 1st. I don't want to be there March 31st trying to do that because it'll be a madhouse, right? But
Absolutely.
with business license, you have to prove your income, either a Schedule C or a tax return. So, but you can always use an estimate if you don't have that done.
Absolutely. So, Sarah, we've got about 8 minutes left, and I'm going to tie two questions in for us to close this out. You
Okay.
know, one of them is why do we look at the big picture? And I think that also goes into my question, when is the best time to do tax planning? Because I think they go hand in hand.
Oh, absolutely. You need to do tax planning starting in the middle of summer, right? You
Right.
typically know if a big job's coming or if you're having a baby or those type of things. Again, the middle of summer, we're not that busy. We got a lot more time to give you. And it may be a little bit cheaper because not as much income is coming in. I tell all my people, like these people who like to sell stocks and have got 800 lines of that, and that all has to be entered. And I don't have my AI doing that for me yet. Um, I will give you an estimate for April 15th because I can just put in a number to get you, the totals. But when I do that tax return, they like to see every line. Okay.
Absolutely.
So
Absolutely.
I will happily give you an estimate for April 15th if you come back in June or July where I can download all that stuff into that tax return.
Absolutely. Absolutely. And you know, so also what about the big picture, Sarah? I mean, you know, we've been living in like a roller coaster for the last 3, 4, 5 years with COVID and the economy and everything. And some people can't see the forest for the trees and they try to go it alone. And you know, two hands make more noise than one. And you want to get a big picture, you need to get that big picture with those five wise women.
That's right.
And so, you know, what is probably the biggest big picture that an individual needs to get a grip on?
Selling property. I see the biggest mistakes that people make is selling property, real estate. They don't understand the implications of that.
Like, give me an example.
All right, so let's just say I have a beach house and I've been depreciating that all along. when I sell that, I've got to add all that depreciation back in. That's all new capital gains right there. Well, if you don't have anything to offset that with, you're going to have a lot of capital gains on that piece of property you just sold because you just added back in $50,000 of depreciation you took. Now you got to pay all those years you got that depreciation break. Now the IRS is saying, I want that money now all at one time. So maybe it'd be better to do an installment sale where you sell it over 5 years, right? So then you're not having as big as a capital gain at that time.
So
It's all, go
you're
ahead.
you're saying in other words, like maybe you do owner financing
Order
for the
financing, installment sales. Look at that big picture. Or do a 1031. Maybe you want to get a bigger beach house because you got more kids now or more family.
right.
So, but you need to plan all that ahead of time.
So what if somebody was going to sell just the regular house and maybe they weren't going to buy another house right now, or they're looking, you know, or thinking they want to capitalize on the market right now and then buy one later? Is there any implications?
So like a personal house?
Yeah, like a personal house.
Okay. So if it's a personal house, if you've lived in it 2 of the last 5 years, and if you're married, you can make up to 500,000 over what you paid for it without a tax consequence. If you're single, it's $250,000. So I'll just use my father as an example. He went to a nursing home. We sold his house, right? Granted, it had been upgraded, it had things done to it. So when he bought that house for $32,000, and then he did all these upgrades, added, changed, we got it up to, let's just say, $200,000, right? We made $250,000 because my mother was dead already, to the penny, and I had every receipt ever spent on that house because my father was good at listening to things I asked him to do about that. That we didn't have to pay a penny on that. And you think about it, he originally paid $32,000 for that. Upgrades, different things like that that you can add to the value of the house. We added, new rooms, bathrooms, because having 6 kids in a house, you need more room, right? So
right.
we did all that along the way. But he didn't have to pay a penny in taxes on that personal residence. But that's only for a personal residence. Now, a lot of people have 2 homes. Let's just say you got 2 homes and you're deciding you want to move into that beach house. You're done. You're retired. You want to go have fun. So you sell your personal house, right?
Right.
And then in 2 years, you decide you want to downgrade your beach house. That is now your personal residence, and you're not paying the taxes on that. So again, that's what we're here for, to help you with that, to help you see the big picture and to do things that will help you not pay as many taxes.
Absolutely, Sarah. This has been really very educational and informative today. I can't thank you enough for your wise words of wisdom and sharing that with our audience. And we have about a minute and a half left. Tell our audience how they can get a hold of you and how they can book an appointment or just have a conversation if they want to have a conversation.
If you want a conversation or an appointment, just call the office at 770-545-8841 and ask for Jennifer, and you'll get on my calendar. I'm not allowed to touch the calendar because I screw it up.
Absolutely. And, and also, do you have a checklist for people if they're coming in to have their taxes done of what they need to bring or anything? Do you have a checklist?
So we have checklists. We also have a new program called TaxStone that in that it gives you an organizer, and if you answer those questions, it'll tell you what I need.
Okay.
If you do that, if you answer the questions that organizer, it'll say, okay, you need to send in your 1099-R, you need to send in your mortgage statement, you need to send in your kids' college 1099-8Ts. You fill out that organizer, it tells you the things I need.
Absolutely. And is there any way possible that we can get a copy that we can provide to our audience, or
Yeah,
can you on social media? Maybe you can maybe put it in the
yeah,
comments as a thing. That would be great, and I'm sure it has information you how they can get a hold of you.
absolutely.
Absolutely. Well, Sarah, thank you so much for joining us here today. And for those of you that you can go to WCEG Network, you can see us on Roku TV, Apple TV, and on YouTube. Also, my YouTube channel, and also tomorrow's Women of Community Impacts Coffee and Connections. And we're going to have you back tomorrow from
Yes.
10 to 11 to share with our local networking groups. Where we have a lot of international people, but we have a lot of people from Georgia, Ohio, Kentucky, all over that join us tomorrow from 10 to 11. So go to the Women in Community Impact. You'll see the meme. Click the registration link. You'll get a Zoom link, and you will get to join us as well. So with that being said, thank you, WCEG Network. Thank you, Penny Rogers and our board. This has been a great opportunity today, Sarah, to enlighten our listeners and audience on how to get prepared for their tax return this year and in the future.
Yes. Thank
Uh,
you, both of you. Thanks, Celeste.
all
Thanks,
right, thank you.
WCG.